This is Agriculture Today, and I'm Shelby Varner with the K-State Radio Network. A slightly surprising WASDE report is what K-State grain economist Daniel O'Brien and the senior economist at the IGP Institute, Guy Allen, begin today's show discussing. They talk about corn and grain sorghum in the first segment. Daniel and Guy keep the show rolling as they explain what changes the report showed for wheat and soybeans. K-State meteorologist Chip Redmond wraps up the show with his weather forecast, where he explains if we will get a break from the summer heat and if it will only be temporary. That and more is coming up ahead on Agriculture Today. You're tuned in to Agriculture Today, and we start our Friday show with a domestic and international grain market update with K-State grain economist Daniel O'Brien and the senior economist at the IGP Institute, Guy Allen. Daniel, Guy, thank you both so much for taking the time to join us today.
Thank you very much, Shelby.
With our recent WASDE report, Daniel, what are we seeing domestically for corn?
It was a surprising report with yields. With USDA projected yields coming out of the August report following a NASS survey, lower than had been expected, projected at 180.7 bushels per acre. There had been some pre-report surveys from independent sources that were projecting closer to 184, thereabouts. Again, everything right now at this time of year is based on not so much measurements in the field, because it's a little bit early for that, but what farmers perceive their crop production prospects to be, and then what the USDA showed came out of those farmer surveys. There was a surprise change in acreage, in that the corn acreage figure was raised from about 95.3 million planted up to 96.7. So that's sizable, and with a similar increase in the harvested acreage projection. So here you had a decrease in the yield per acre, but an increase in the production figure. So you ended up still at just about 16 billion bushels as a projection for 2026 production. But there was a decrease in the ending stocks projected for the 2025-26 marketing year, i.e. basically the number that we'll see on August 31st. And that followed basically from an increase in U.S. exports. Here we've had such a strong pace of U.S. corn exports to places like Mexico, but not only there, that the USDA increased the old crop marketing year number up to 3.4 billion bushels, had been 3.325, and that had been, quote, a very scientific term, way above where we'd been in the past for records. I think we were 2.7, 2.8 previous record. So strong exports. By the time we cut back 75 million for beginning stocks, had about a 13 million increase in projected production for 26. Then you ended up with the USDA following the projection for increased old crop exports with also increased new crop exports, that up to 3.275. You ended up with the bottom line issue that market economists look at, fundamental supply-demand calculators, where the USDA had dropped their estimate of ending stocks for this marketing year down to 1.653 billion bushels, and raised their estimate of price to $4.50. Stocks to use have been basically 11%. Then now it's down to 10.1, and really sets us up, I think. Guy, I invite you to comment on this too. Sets us up for any, I guess, any more yield uncertainty or changes that could happen in the September report that will be coming out in let's see, I think the date of that, I believe, is about the 9th or so of September. So anyway, so when that report comes out, we'll really be watching September 11th, pardon me. We'll really be watching what the yield figure is and seeing where that could take the market. The futures initially had a strong day up on Wednesday as this report was released, down yesterday, down about 9 cents. So not far So we jumped up, came back down, still waiting to see what the official numbers will be. Guy, any comments on that? Then if you want to take the international side away, go
Yeah.
ahead.
So just a couple comments on the domestic side. Yeah, we're starting to see we still have good carries in the market with anticipation of a big crop. We're starting to see a bit of dichotomy in the basis values, particularly in the Western Corn Belt with this hot, dry weather we're seeing. Being out in Western Kansas this week, crop looks surprisingly good, but gee, it's under an awful lot of stress at the moment, and we're losing production there every day. One thing I would highlight on the domestic side of things is just the strong demand we're seeing from the ethanol grind. We're up nearly 1% from last week, up 2%, over 2% from last year on ethanol demand. Margins there are just really, really good, keeping nearby prices into those facilities pretty strong there. I kind of expected it to maybe drop off as we approach the new crop, but those values are pretty good. So from a domestic point of view, that's really all I've got to add to your comments there, Dan.
How about on the international side? As
Yeah,
I as
looking at the international side, with everything going on in the Persian Gulf, particularly, I would have expected a bit more volatility in the U.S. dollar, but it's still trading just above 99, below 100. It's been pretty steady, surprisingly, giving everything across. We're a little weaker today. We're a little stronger yesterday in the wake of the USDA report, which would have held that back a bit. A little weaker today, even though the markets are a bit weaker here on Thursday, so we'll see how we finish the week out here at the closes on Friday. So it's been a bit mixed, but quite a bit of support there. Looking at transportation, you mentioned the record exports we've had for corn this past season, and looking forward to next year, we should have another good year. It'll be interesting to see if we have another record year of exports. But in a global situation, the way things are tightening up for corn, we're really bringing that back down to the U.S. to being the residual supplier. So they're going to have to come to us for any additional corn in the marketplace, particularly given the dry weather in Europe. We expect their corn imports to be up, I believe, yeah, about 5 million metric tons better than last year, given the dry weather there. And just as I started off talking about freight, we are seeing strength in the dry bulk freight market. I think that's being raised more by the increased cost of fuel for the transportation, but it does give us a comparative advantage in transportation, particularly going into Europe and North Africa in that area. So that's sort of helping us out there a bit into those sort of markets on that.
the world stocks to use, just straight stocks to use, before you take China out, declining to the point where we're hearing credible, respected market analysts talk about growing world concerns about with regard to adequacy of corn supplies. You look at the numbers, 24-25 marketing year, world stocks to use 23.7%. Then this last year, when we were just about to finish up here, August 31st, 22.5%. Next year projected down to basically 20.7 and 20.7%, or about 21%. So tightening up there. World less China now sits at just under 11% for the projection for this next year. It was 12% last year, the year before that, but was 11.2. So it's been bouncing around some, but not showing any overwhelming growth at all. And as you mentioned, drought in Europe certainly a factor. Some uncertainty going forward, I think, with the El Nino, La Nina cycles, how that might affect South America, all in play.
Yes, no, definitely. Look, as we get down to 11% on that stocks to use for exporters, that's getting pretty tight. We get down below 10, that'll be really, really bullish, the corn market on that. You did mention China, just a footnote there. China's corn imports were reduced by 1 million metric tons to 4 million metric tons. Keep in mind, China's the second largest corn producer in the world, so they would like to be self-sufficient on that. But with their demand for animal protein, they do import a little bit. Talk a bit more about China, I think, when we get to soybeans.
And moving on to talking about grain sorghum, any surprises for what we saw in the WASDE report, Daniel?
Yes, the USDA dropped their projected production of grain sorghum in the U.S. from 380 million bushels in the July report down to 296. So 84 million bushels off, almost 25, almost three-quarters of the crop now projected. And of course, Guy, you mentioned the hot temperatures in western Kansas. No doubt, coming during some awfully important times for sorghum. That with that change, they basically rebalanced their supply and demand balance sheet. What stood out to me was that the export number had been 220 million bushels in July, had dropped to 210. That's for this old crop marketing year. For the next year, they're putting it down to 170 million. Well, we can have the intention of strong export buying, and I think China probably still has commitments to fulfill on that. Guy, you can comment on that if you want. So for this coming year, with again a sizable reduction in anticipated U.S. supplies, a lot of that from Kansas, the USDA dropped their export figure for the next marketing year, 26-27, down to 170 million bushels. So we were at anticipating about 205 million in the July report, now down to 170, and I think that's just rebalancing. And in the midst of that, they did tighten up the supply demand balance sheet, raise the price projection by 20 cents. Guy, any thoughts on sorghum?
Yeah, no, we're definitely reducing that export number. I'm a bit surprised we haven't seen sorghum prices respond to that tightening, particularly given the weather and the hot weather forecast continuing for the Western Corn Belt there. But, it's still pricing itself pretty aggressively in the ethanol and feed markets. But, that's going to make for an interesting export matrix for grain sorghum in the coming year.
We're cutting to a short break now on Agriculture Today, but when we come back, we'll once again be joined by K-State grain economist Daniel O'Brien and the senior economist at the IGP Institute, Guy Allen, as we continue discussing the domestic and international grain market. You're tuned back into Agriculture Today, and we continue our conversation with K-State grain economist Daniel O'Brien and the senior economist at the IGP Institute, Guy Allen. As we keep chatting about the grain market, wanting to pick up with wheat, and Daniel, what are we seeing domestically?
The results of the August report did show a modest tightening up of ending stocks, all that much more. The rest of the supply demand balance sheet didn't change that much. Small drop in projected yields, down from 47.9 to 47.8. The stocks to use figures, probably the most notable thing nationally here. 2 years ago, 24-25 marketing year, we were at 43.4% stocks to use, all U.S. wheat. Last year, 45.0%. And now we've declined for the last couple months down. Now we're down to 38.3. Hardly, I guess, austerity without stocks. We're still at 717 million stocks, but we have issues going on. We're getting contacted, people wondering about the hard red winter wheat crop and its impact on the market overall. You look at the hard red winter wheat crop for the 25-26 marketing year that ended May 31st. We had 437 million bushels of ending stocks, 56.4% stocks to use, and that was based on 804 million bushels of U.S. hard red winter wheat. So this year we had a crop size of 463 million, almost cut in half, and the ending stocks 304 million now, again down from 437. We had exported 321 million hard red winter wheat out of the U.S. in that last marketing year. Now we're projected down to 210. Ending stocks projected at 49%. So, in 1 year, things can change. And I'm curious now, with the prices having moved up to the higher side, where that will put us when farmers make their decisions of whether or not to sow hard red winter wheat in Kansas this coming year. Guy, how about your thoughts on all that?
Wheat's an interesting market, particularly from the global perspective, and particularly when you bring in this Russian-Ukraine conflict. It's got a lot of focus here recently, particularly with the increased destruction of critical infrastructure, as well as the sinking of some boats on that, which, you're destroying that infrastructure. It's not going to come back as fast as a lot of people think, which puts that whole export capacity of a third of the world wheat trade coming out of Ukraine and Russia significantly at question. And that's really what's driving the volatility in the wheat market today. Russian production unchanged at 85 million metric tons. Exports are estimated at 46. Ukraine situation, production at 24.5 million metric tons, up 1.4 million. But with their exports coming at 13.5 million metric tons, that gives a combined exports of just under 60 million metric tons. But I'd say there's a big question mark over that number. Looking at our friends in the southern hemisphere, Australia is experiencing some dry weather at the moment. 56 to 40% of Australia wheat is in drier than normal conditions over the last 30 to 60 days, respectively. That crop gets harvested in late October, November, so definitely dropping some yields on that. Looking at the USDA numbers for wheat, Australia crop estimates were unchanged at 28 million metric tons. That's compared to 36 last year, so that's down 8 million tons from the previous year. On other import markets, on China's estimated imports were pegged at 6 million metric tons. That's up from the previous year, about 500,000 metric tons, and that's going to be definitely in the more milling type wheats on that.
I just would add to that the latest number, the August projections for 22.5% world less China ending stocks. That would be down from last year, 23.5. So tightening up a bit, but as you say, most of the things that we would be worried about would have to do with just the ability not just to grow the crop, but to be able to move it out. And what you identified in terms of the Black Sea region and all that's happening there in for both Russia and Ukraine is a big issue.
Going back to your initial question on planted acres for this coming wheat crop, particularly in Kansas, Price has done quite a bit of work, but with the drop we've seen in wheat production in the last few years, I'm still optimistic. Price is going to have to do a bit more work to price more planted acres into winter wheat planting.
What are we seeing for soybeans?
On the domestic side, the supply-demand balance sheet for soybeans also is affected by newer production numbers, a small decrease in the projected yield of from 53 down to 52.7 bushels per acre for all the U.S., and also an sizable increase actually, from the July projection to the August projection, planted acres for beans. It was 85.4 million acres projected, and given what the USDA had in hand to project with in July, and then came out in this August report, 86.8. And I think that was a major surprise. There wasn't a surprise that the yield would be down given some of the rugged weather we've had, but the acreage number coming up is a big thing. And then the rest of the supply-demand balance sheet, a small change in the ending stocks from last year, down about 5%. By the time you looked at the combination of acreage and yields, we ended up with a bit higher projection of production for this 26-27 marketing year starting September 1, up to about 4.52 billion bushels. Crush number was up. Guy, I know that's near and dear to your heart. And looking at where crush goes in the U.S., particularly in the Illinois area, but up to 2.78 billion bushels, was 2.65 last year. That was up from previously 2.445 from the year before that. So growth in crush. And the export number this marketing year, 1.52 billion bushels, projected a bit higher by the USDA, 1.66 in this report. So that's a calculated estimate of how the U.S., Brazil, Argentina, what they all bring to the table in the world export markets, and how China, and particularly China and other buyers, are coming in to buy. Ending stocks up about 10 million bushels to 320 million. Stocks to use still about 7%, a little bit higher than it had been. Other changes, really in that oilseed complex, what really was changing was an increase in domestic disappearance, exports to the higher side for soybean meal, total usage up. And you also saw some similar jumps to the higher side for soybean oil usage. Guy, any comments on that, on the soybean co-products and the international side?
Yeah, just looking at one thing, the USDA, they raised their total non-U.S. soybean imports for the current year up 1.7 million metric tons. And for next year, they raised it up 1 million metric tons. Just expecting that continuous strong demand for meal driven by the animal complex. The crush margin remains strong and healthy. One thing that was commented last week in Chicago at the USEC meeting was the oilseed industry has stayed pretty reserved in an expansion of their crush capacity. You didn't see a lot of people rush out in the wake of the biofuels and overbuild capacity. It's been very deliberate and constrained, which leaves that crushing profitable. And I think that's helped, particularly with the soybean meal prices, the good export demand that we've seen, along with just not a rush of oversupply that's being dumped on that market. We're also seeing a fairly significant shift in paradigm of crush. Argentina used to crush all their beans. Their tax situation, they're moving to maybe exporting more whole seed. On Argentina, USDA reduced their production estimate by 1.5 million tons to 48.5. Brazil, they increased by 500,000 tons to 180.5 million metric tons. And then Paraguay remains unchanged at 12.1 million metric tons. South American exports basically remain unchanged net on there. The Chinese crop was left unchanged at 21 million metric tons. Expect imports into China at 115 million metric tons, which is compared to 113 last year. Again, underlying a good indicator of strong animal protein demand in China as well.
One thing that you wonder about when you see the last 3 marketing years, world and world less China ending stocks projections just keep declining and tightening up. The world stocks 30.6% 2 marketing years ago. Last year, well, the one that we're still in will be finishing up soon, 29%. This year projected down to 28%. And the world less China figure, again, 2 years ago, 28.6%. Last year, 27.25. This year, 26. So again, you look at the corn and the soybean supply-demand balance sheets on the world stage, and we're not falling off a cliff, but we're not building them up or tightening up over time. So that brings about export business, I think, for those countries that have it to sell, and that's mainly the U.S. and China, and to a degree, Argentina. Thoughts on that, Guy?
No, exactly right on that. We're sort of tightening up the balance sheets across all these commodities today. So I think we're setting ourselves up for a very dynamic market going into 26-27 marketing year, where we could see quite a bit of volatility. From a grower point of view, I think we need to keep that in mind as we approach harvest and putting together our harvest, post-harvest marketing plans on that to expect increased volatility in this next marketing year.
That was the senior economist at the IGP Institute, Guy Allen, and K-State grain economist, Daniel O'Brien. We're cutting to a short break now, but we'll be right back. You're tuned in to Agriculture Today, and we conclude our Friday show with the weather update from K-State meteorologist Chip Redmond. Chip, thanks for joining us today.
Yeah, thanks for having me.
Chip, in typical Kansas weather, it's been really hot. And so how hot do we see it get around parts of the state this past week?
Yeah, it's been oppressively hot, to be honest with you. We've been in the stretch now about 6-7 days of 100-degree heat or more for portions of Southwest or West and central Kansas. Really, the highest temperature we measured so far, at least in the Mesnet, was 113 in Lincoln County at our Denmark Mesonet. That's absurd, even for Kansas standards. That's a record temperature for that day at that location. Most of our records this time of year are in that 100 teens. So we're not really breaking all-time records, but definitely everyone's ready for some relief, I think, at this point. Probably the biggest impact of the heat has been it's been dry and breezy, too, with winds sometimes up to 20 to 30 miles an hour. Gusts, and that just zaps the soil moisture and just rapidly dries things out. We've already had crops really struggling in a lot of west and central Kansas, and that's just continuing, unfortunately, until we can get rid of this heat. And while there has been places, especially to the north and east, that have been cooler, they're only in the mid to upper 90s. They had moisture a week and a half ago or so, and so they're really oppressively humid. And so it's like there's no positive side, really. It's either uncomfortable or unfortunately crops are struggling.
Do you have concerns with how dry parts of Kansas are?
Yeah, we look at the precipitation deficits the last 30 days, like central Kansas has gotten pretty much nothing, and same as parts of Southwest, but central averages more, which means they're about 4 inches in the hole for the last 30 days. That's a big deficit. It's not our wettest time of the year. We've moved on from that, and we're on the downward trend, which means it's just going to be harder to make up these precipitation deficits as you go into the fall and the winter. So the dryness is obviously having a big impact on agriculture right now. We have green vegetation that's slowly going into dormancy, but still using up subsurface soil moisture. We're developing a drought problem that probably isn't going to go away in just a month or two now, and it's probably going to carry through at least until a significant change comes this winter.
Are we going to be getting rid of this hot and dry weather anytime soon, or at least see some relief?
Yeah, so as we talk, there is a stationary front. Well, we shouldn't say stationary, a weak cold front now that has moved into the northern part of the state and the western part of the state, resulted in some showers and storms last night that brought some needed precipitation, but limited, unfortunately. That's going to continue to kind of sit around northern Kansas, I think, for at least through the weekend, and that's going to provide several rounds of showers and storms. This front currently has been in the Dakotas and draped over into the Great Lakes, so Illinois, Indiana, Ohio, and it has been responsible for significant severe weather this week. Thankfully, we're not going to see that potent of severe weather. They had 100-mile-an-hour winds and baseball-sized hail. We're not going to thankfully see that, but we should at least bring cloud cover, cooler temperatures, and some chances of precipitation. I think western Kansas, northwest specifically, probably has the best opportunity for rainfall, maybe anywhere from a half inch to an inch to get under multiple rounds of storms. But, as we look beyond that, we are going to get some brief reprieve in temperatures through the weekend to early next week. But we look beyond that, I see the ridge of high pressure building back in, pushing that front back northward into further north into the central plains, and likely heat sticks around or rebuilds, especially for southern Kansas, southeast Kansas, and we'll likely see the heat return. I don't think we're quite done with it yet. Still pretty early to call summer over to this point. And so we're going to have more heat to deal with, and hopefully we can get this precipitation to be a little bit more widespread in some of the areas that really need it. But unfortunately, I'm afraid it's too little too late for a lot of folks, as droughts already expanded this week, and we have new introductions of severe drought in central Kansas.
Chip, I appreciate you taking the time to join us today.
Yep, thanks for having me.
That was K-State meteorologist Chip Redmond. That's what we have for you this week on Agriculture Today, but we'll be back with more for you on Monday.